Thank you very much. It is definitely a pleasure to have been invited here today to give you MasterCard's thoughts on the importance of the ongoing debate around the anti-money laundering legislation and how this is especially relevant for the financially excluded. At MasterCard, we are particularly concerned with issues surrounding financial inclusion. You may have noticed or seen that Ajay Banga, our CEO, was recently appointed as co-chair of the World Economic Forum's Financial Inclusion Project. Today, I'd like to briefly share with you some consumer-focused ethnographic research we conducted last year, which looked specifically at the needs and concerns of groups of financially excluded and underserved individuals in Europe. The reason I'm sharing this research is to illustrate the importance of a risk-based approach to AML and customer due diligence, and the need for anonymous, simplified due diligence, and fully KYC'd prepaid cards to be able to provide an on-ramp to the financially excluded into the financial mainstream. As part of this research, we interviewed more than 600 financially excluded and underserved people across 6 different European countries. We got to know many of these participants very well, and some of them were so kind to allow us to film them as they went about their everyday lives. We wanted to really understand who these people are, how they pay, what kind of support networks they have, and what their life aspirations are, and whether they already knew about prepaid cards and the benefits they could bring to their current lives. So what do you see when you think about the financially excluded? An illegal immigrant, homeless, out of work, no education, utterly impoverished and unable to get a good meal or decent clothes? Some of them might fit these descriptions, but many, many more do not. This is a very diverse group of people with many different reasons for being financially excluded. So let me paint a little picture for you. In the population that we studied, the average age was 40, and there were marginally more females, about 55%, than males, around 45%. There were 2 distinct populations in the research: the financially excluded consumer, who did not have any formal financial services, and the financially underserved consumer, who had some form of account but no access to electronic payments. The majority of both groups are collecting some form of income through wages, pensions, or welfare benefits. Many of these individuals do not believe they need a full bank account or that they have sufficient money to qualify for one. Crucially, a substantial portion of the financially underserved and excluded also believe they would not be allowed to have a bank account due to lack of sufficient documentation, identification documentation. So it's really clear from the research that many people don't have the documentation required to pass a full KYC check. Another example, which we did not show here in this film, is Andrea in Spain. She's a migrant worker from Romania. She lives with her employer, which is an elderly woman, and therefore doesn't have all of her identification documents. She has her identity card, but no utility bill or credit card that can be used to verify her address. She works Monday to Saturday and only has Sundays off. Of course, this is the one day that the bank is shut, and she has no access to the basic facilities her local bank could possibly offer her. She transfers money back to her family in Romania via a costly and quite possibly unregulated money transfer service. No, it's not Western Union. Rosaria could, though, however, purchase a reloadable prepaid card from her local village shop with limited Know Your Customer checks allowed for under the simplified due diligence provision. Once activated, Andrea would be able to reload her card with cash, then use it to purchase goods or services or perform other basic financial needs. Even if she was able to visit the bank, Andrea would not qualify for a bank account due to her lack of full due diligence documentation. This is just one example. We believe it clearly underlines the importance of easily obtainable prepaid cards for financially excluded individuals and for the continued provision of the simplified due diligence within the anti-money laundering legislation. So MasterCard believes in a risk-based approach to AML compliance, and customer due diligence is required. We ask that the proposed AML directive maintains the ability for prepaid cards to be distributed in retail and online environments, and that they can either be done anonymously with restrictions such as no cash access, non-reloadable, and a limited load value up to 250 euros, With simplified due diligence, collecting and verifying one form of ID. This category needs to be reloadable up to a maximum value per year, which is currently 2,500 euros, and have domestic cash access, or obviously fully KYC'd with no restrictions or limits other than those imposed by the card issuer. By providing all three levels of customer due diligence, consumers like Andrea can more conveniently obtain a basic payment product where she shops and on her own time. This initially may start as an anonymous product, but then quickly move to an STD version when she provides sufficient documentation, and potentially on to a fully KYC product when she can verify her address. To support the simplified due diligence, we believe it's important to have an online verification tools in all member states and a harmonized set of due diligence measures across those member states. It's not without saying that ongoing monitoring of the business relationship and transaction is key to any AML program. MasterCard has a rigorous anti-money laundering program in place that has been designed to prevent its products from being used to facilitate money laundering and terrorist financing. Moreover, MasterCard requires our own prepaid card issuers to also have an AML compliance and monitoring program in place and conducts initial and ongoing AML reviews. All issuers of prepaid cards must have their prospective programs reviewed and approved by MasterCard in advance of any cards being issued, and this does include an AML check. We believe that prepaid cards with the appropriate controls in place represent a low anti-money laundering risk. However, if the simplified due diligence category for KYC gets eroded or stopped altogether, then we are effectively cutting off large tranches of society that may already be benefiting from the added value of a simplified due diligence prepaid product that one gives them. And worse, we run the risk of permanently disenfranchising millions of excluded people from ever easily being included in electronic payments. It is also important to consider that if prepaid programs were not to exist, it would only reinforce the use of cash in society. This would not benefit law enforcement and tax authorities. Cash is the fuel for the underground economy and the most prevalent use in money laundering topologies. The expansion of the simplified due diligence prepaid program will not create more money laundering risk. Rather, the case can be made that it will actually reduce money laundering risk. Additionally, current discussions of capping the prepaid interchange to 20 basis points or eliminating interchange altogether will result in prepaid issuers investing less in the promotion of prepaid cards, and the visual identification requirement will stigmatize the financially excluded even more. Electronic payments can instill a sense of self-worth, inclusion, and dignity. Our research has demonstrated this point very clearly. People want to feel included. They hate the stigma and social connotations that inevitably get associated with being financially excluded. When we look to the future, it is important to bring the financially excluded and underserved with us on this transformational payments journey. And as part of this, all categories of prepaid cards and other types of basic payment accounts have a real role to play in a drive for greater financial inclusion. Thank you very much.
Thank you very much, Matthew.